Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's get started. The U.S. market indices extended gains for the third week in a row and traded at new record highs amid rising expectations of a rate cut in December. Market sentiment remained positive after the latest updates on factory orders, and labor market supported the case for one more rate cut before the end of the year. In Europe, stock markets jumped as much as 4% this week after business activities remained in contraction, raising expectations of a rate cut after the policy meeting next week. Investors largely overlooked brewing political turmoil in France and hoped that the second largest economy in the Eurozone would soon form a new government. In Asia, investors held out for a rate cut in Japan and additional fiscal measures in China to fight deflationary trends and looming U.S. tariffs. Let us review key economic metrics in the U.S., Europe, and Asia. U.S. non-farm payrolls in November jumped by 227,000 from the upwardly revised 32,000 in October. The closely watched labor market data confirmed the sustained hiring in healthcare, leisure and hospitality, government and social assistance. Employment increased in transportation equipment manufacturing, reflecting a return of workers who were on strike. However, retail trade lost jobs. Employment growth in the previous month was negatively impacted by the Boeing strike and two back-to-back hurricanes, Helene and Milton, spanning several states in the South. Over the past 12 months, the U.S. economy added 186,000 jobs per month. Both the unemployment rate at 4.2% and the number of unemployed people at 7.1 million changed little in November. The latest update on the labor market also confirmed in a separate report tight conditions as the private sector continues to add more jobs in the service sector. U.S. job openings in November increased by 372,000 to 7.744 million from a downwardly revised 7.37 million in September. The U.S. goods and service deficit fell to 73.8 billion in October, a decrease of 11% from 83.8 billion in September. Exports fell 1.6% to 265.7 billion and imports eased 4% to 339.6 billion, resulting in a persistent high deficit with China and the European Union. Goods traded deficit with China narrowed to 25.5 billion from 26.9 billion, with the European Union decreased 6.7 billion to 17.1 billion, and with Mexico narrowed slightly to 15.4 billion. Switzerland is one of the few developed economies in the world where prices are stable over the last 3 years, despite elevated worldwide inflation. Annual inflation rate in November edged up to mere 0.7% from 0.6% in October. UK home prices continued to rise at or above 4% for the fourth month in a row, and the average home price rose to a new record high of £298,083. Separate data released by Nationwide this week showed house prices rose at the fastest pace in almost 2 years in November. Property sector demand is expected to remain high following the recent strength in the job market, and possible decline in interest rates in the coming months is likely to ease mortgage rates. Reserve Bank of India held its repo rate at 6.5%, and the rate setting committee held rates steady for the 11th meeting in a row, citing elevated inflationary pressures. Consumer price inflation in October surged to 6.21%, surpassing the upper end of the target inflation range set by the central bank. RBI lowered its fiscal year 2025 annual GDP growth rate estimate to 6.6% from its previous estimate of 7.2% after the second quarter annual economic growth rate fell sharply to 5.4%. The Reserve Bank lowered the cash reserve ratio for banks by 50 basis points to 4%, the first cut since March 2020, and making more cash available for lending. In other economic news, private sector activities in Italy fell back into contraction territory, and in Spain, growth slowed to a 10-month low in November. The euro area's manufacturing sector activities deteriorated further in November, indicating deeper contraction in production, inventories, orders, and new orders. In Japan, overall nominal wage, which includes base and overtime pay, rose 2.6% to 293,400 yen, an increase of 34th consecutive month. Real wages, adjusted for an inflation rate of 2.6%, were flat from a year ago, from the revised 0.4% decline in September and 0.8% fall in August. A separate report by the government showed that the average household spending declined 1.3% in October, indicating stretched finances amid rising cost of food and energy. China's Ministry of Commerce said foreign direct investment in 10-month period to October fell 29.8% from a year ago to 693 billion yuan, or $96 billion. After peaking at 189 billion in 2022, foreign direct investment fell to 163.3 billion in 2023 and is expected to dip to 127 billion in 2024. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury eased to 4.16% and backed down from a 5-month high after labor market conditions improved, but not strong enough to warrant a delay in rate cut. Texas crude oil prices decreased 3% to $67 a barrel after the OPEC Plus decision to delay the production cut failed to ease worries of oversupply next year. Natural gas prices in Europe eased from a 2-year high of 46 euros and 50 cents per megawatt hour after Russia eased payment rules and permitted the use of third-party banks to transfer money to Gazprom Bank, avoiding U.S. sanctions. The euro traded flat at $1.06 amid political turmoil in France and ahead of the ECB's rate decision next week. The yen stabilized around 150 against the U.S. dollar after real wages were improved to flat from decline in October and September, supporting the expectations that the Bank of Japan would raise rates this month. We now shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq Composite traded at new highs and extended gains for the third week in a row amid not-so-strong rebound in hirings and other positive economic data. European markets jumped as much as 4% despite the growing political instability and lack of improvement in France's fiscal situation. The Nikkei 225 stock average halted a 3-week slide as investors look forward to rate decisions amid improving but weak wage gains and household spending. Hong Kong and China indices advanced for the second week in a row ahead of the key policy meeting next week, chaired by President Xi Jinping, that could announce additional fiscal stimulus measures. India market indices closed higher after a week of choppy trading after the Reserve Bank of India held its key lending rates unchanged 11th time in a row, but trimmed its annual economic growth outlook. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. Salesforce jumped 12% after the CRM software developer reported better than expected quarterly results. Marvell Technology jumped 13% after the advanced chipmaker reported higher than expected third-quarter earnings. Okta jumped 13% after the access management company said revenue in the third quarter increased 14%. GitLab jumped 13% after the developer software tools company reported better than expected adjusted earnings and announced the appointment of a new chief executive effective today. Tesla Incorporated declined 2%, and a Delaware judge upheld the previous judgment to deny Chief Executive Elon Musk the right to receive a pay package worth $56 billion in 2018. Synopsys dropped 7% after the advanced chip design software company's outlook for the fiscal first quarter fell short of market expectations. Crude technology jumped 34% after the high-speed connectivity solutions provider reported fiscal second quarter results. Dollar Tree jumped 4% after the deep discount retailer reported better than expected revenues and earnings in the third quarter. Foot Locker dropped 19% after athletic footwear retailer reported third quarter revenues of $2 billion and diluted earnings per share of 33 cents. Chewy Incorporated decreased 2% and the online pet food store reported mixed quarterly results. Lululemon Athletica rose 9% after the athleisure apparel retailer reported better than expected quarterly earnings. Ulta Beauty surged 9% after the cosmetic retailer reported better than expected results in the fiscal third quarter. Direct Line Insurance jumped 7% after the company said it will recommend a sweetened offer of £3.61 billion or 275 pence per share from Aviva. In the week ahead, investors in the U.S. are looking forward to the release of consumer and producer price inflation data and export-import prices. U.S. consumer price inflation is expected to rebound to 2.7% in November from 2.6% in October, and annual producer price inflation is estimated to edge higher to 2.5% from 2.4% respectively. Central banks of Europe and Switzerland are expected to lower rates by 25 basis points, fourth rate cut in the year for both central banks. Germany's trade surplus is expected to shrink because of the weakness in export growth, and Russia's inflation is expected to accelerate amid sharp price increases in food and beverages. In Asia, China is scheduled to release its inflation data and international trade report, and India is set to release its inflation update for November. Japan's GDP is expected to be in focus along with industrial production data, producer prices, and machine tool orders. You can review U.S. and global financial markets news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on Rodara.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see